everyone, welcome back to TechnoChart's YouTube channel, and in today's video we are going to discuss three more fundamental plus technical stocks that can give you a decent return in the coming future. So these stocks are selected based on the technofunda criteria that I have described in the charting screener. So the detailed explanation of screener is provided in the I button. Now, understanding the basic fundamental criteria of what I have used, we are looking at those stocks where the EPS increase or the earnings per share increase from the past 3 quarters. This is the first criteria. The second criteria is the ROCE and ROE should be greater than the number 20. These are the two fundamental criteria that we have discussed. Apart from these, there are many other fundamental criteria that you can also use by adding in the screener. The link of the screener is put in the description and you can check it out how you can use the screener. Now, the technical criteria is that the stock should be within 20% of 52-week high. The market of cap of the company should be more than 2000 crores and it should be above 50 MA. So whenever a stock is above 50 MA, that means technically the stock is good for short-term trading. Now, looking at the screener, we can see the conditions, and let me explain you what are the basic conditions. So here I have put a condition where the EPS should be increasing from the past 3 quarters and the ROE and ROCE should be greater than number 20. These are the basic technical criteria that we will be looking for momentum stocks. One can change this number to 0.70 or 0.60 also if you want to trade for a positional basis and not a short term or swing trading basis. So looking at the backtest result, we see that there are around 4 stocks as of now in this backtest. The one stock of Cosmo Films we had discussed in the previous video, for which the link is provided in the I button. The other 3 stocks apart from this we are looking at is Jindal Poly, Jindal Stainless Steel or Jindal Hisar, and the final stock is of Vidhi Engineering. So these are the 3 final stock that I have filtered out after looking at the screener. Now let us go through the chart of each and every stock. What could be the target, what could be the stop loss, and what should be the time frame. Looking at the chart of Vidhi Specialty, we can see that the stock is forming a pattern like cup and handle, or you can see a VCP pattern type structure in this, where this is the first base of the stock, this is the second base of the stock, and where we can see a third base forming. Right now in this chart, as you can see that the volume has been on the bigger side obviously whenever the stock is trying to rise, but we can see here there is a stiff resistance in this stock. So this stock is good for momentum trading or swing trading only when it crosses around 420 rupees on the closing basis, because the momentum will only be captured when the stock breaks the resistance, right? So if one wants to accumulate this stock for around say 6 months, then one can start accumulating this stock by keeping a stop loss at this level in case of long term or positional basis. But in case of swing trading, one should definitely keep a stop loss below 385 reason and keeping a target, for example, of 10 to 15% while and taking a trade at around 420 rupees. So let me summarize this. If you are a swing trader, then enter the stock at 420 rupees. Target should be at around 470 to 500 rupees and stop loss should be at around 385 rupees in terms of swing. And in terms of positional basis, I would suggest a stop loss of 350 rupees if you are positional trader. Right now, this is the first chart that we have seen today. Looking at the chart of Jindal Polyfilms, we can see that the stock has broken out of a good consolidation. Right now, in that case, whenever a stock breaks out of a resistance area, you should definitely keep a stop loss below the resistance area or the retest zone. Now, in this case, if you enter at current market price, that is at around 1300 rupees, you can keep a stop loss that is safe around 1200 rupees with a target of 200 rupees. So your stop loss is of 100 rupees and your target is of 200 rupees. Always keep in mind while taking a trade that risk to reward should be minimum 1:2, so that even with 50% win ratio, you are profitable over a period of time. Never think in terms of a single trade. Think in terms of groups of trade, that is of 10 trades or 100 trades. Right now, looking at the volumes in this chart, we can see that the stock had broken out with a huge bullish candle on the huge volumes, and whenever the stock was pulling back, there was significant drop in volumes. Now in that case, this generally means accumulation by bigger players and they do not want to exit from this stock. The stock is comparatively cheap to the compared to the peers and in a very good industry of packaging. So this is a good potential multi-bagger, or you can want to trade for 20 to 30% return that could be achieved in 6 months, right? You never think in terms of short term trading of 5 to 10%, because in this kind of volatility it will hit you really hard. Okay, the stock that I'm going to discuss is of JSL Hisar. Now this stock has incredible strength in terms of RS value, because whenever the market is falling, the stock is having the strength and not falling compared to the overall market sentiments. So that means whenever the market is going to rise, this stock is the first one to rise because it already has strength. So this is a simple RS relative strength meaning, right? So in case of JSL Hisar, one can enter the particular stock at current market price with an initial stop, I would suggest below 380 rupees. So this could be an accumulation zone for this stock, and stop loss below should be below 380 rupees with a target of 450 to 470 rupees. This is one of the strongest metal stocks that in the current market, right? So always keep in mind the risk to reward before taking a trade. If you like the video, just share it with your friends and do subscribe to the channel, because most of the people have not subscribed to the channel and are just watching it. So yeah, thank you.